Hello team, good morning. It's Wednesday, November 20, and I'm back. Yesterday I skipped the day because I was busy in real life, and honestly I also didn't felt too well. I'm dealing with the flu since I'm back from Turin, and I cannot get rid of, but whatever. So, we got some news. Again, nothing too big to be afraid. So, tradable days. Yesterday was kind of a sneaky price action, eh? Really sneaky. Also, was noticing something that I posted on the group that basically look at this. Saxo, the indicator of bullish bearish price action, price action, market structure is all bullish, no? Because they say that they are doing higher high and higher lows, while ICM is all bearish, and this is due because on ICM the daily opens at 22 o'clock, on Saxo on 23, so the candles are unsynced, you know, the candles are unsynced, and it's kind of funny, but also make you think about, because in the end price action, if you go on lower time frame, look at this. I want to show you, because this is important. It's not like stupid. Look at candles. They're all the same, you know, all the same. So sometimes just a different perspective of the candle open can make you bearish or bullish, and you know this is stupid, because look at here on the upper right. This one said that there is a 14-hour to close the daily candle. So 14.8, it means, yes, 22. So 15 hour, yes, 15 and 8 is 23, while ICM says 14 and 8 is 22 hours. So what does that mean? That just check it at what hour the candle closes, it can change your whole bias, which is stupid, because we shouldn't have the bias just based on a candle close. We should have the bias based on price action, which is higher high and higher lows, you know, like lower low and lower highs. So you shouldn't take trade based on a single candle close, you know. Always remember that. I think it's important to notice, you know, it's no joke. Literally, imagine that you base your trading on this indicator, and this is bearish all the time, and this is all bullish. Sorry, this is bullish all the time. You know, look, FXCM has a H1 bearish because they have this wing low. Yeah, it's funny, guys. It's funny. I don't know. It's kind of funny. You really should think about this. Anyway. Let's go to our trading. Sorry for the parenthesis. As I said, the Monday, we could see some sort of pullback, and the pullback arrived. We also touched this old support, because this was valid support. They sent higher, saved the price, and then sent like, I don't know, 400 pips higher. 550 pips higher. So now it's been touched even twice. Let's see what's happening. It doesn't mean that we are gonna go down because we touched this one, but yeah, it's kind of can be a necessary flip. But the whole area, is like 75 pips, is not small. Okay. Oops. Why here? Daily wise, yesterday closed extremely bullish, even if it's red or white, red or green, sorry, depending on the broker you use. Well, you see such a big week, you cannot think bearish, you know, as of daily at least. Let's go to hourly now. Okay, this is where it gets funny, because Saxo, for example, it BMS up. So yesterday, when you see this big dump, you could have been predicting like higher price, because H4 BMS up the previous structure here and raided the lower. And overall, if you put the line chart, it's printing higher high and higher lows. You know, even SAX or ICM is the same. They're printing higher high and higher lows. This is what I mean, guys. At some point, you need to stop to think about the closing of the candles or the rates or the everything. You really need to think about higher high and higher lows, because in the end, this is what means price, what level reached and where it goes. So I know it's easy to talk now because it's a day later, and it passed a day, and I'm talking in hindsight, and yeah, of course, it's all easy like this. But to be honest, after this dump, you shouldn't become too bearish. First of all, they failed to close below all these lows, which made the high, no? And second, in the overall, the price action is still bullish, you know? We are still printing higher high and higher lows all the way up. You know, you should consider the last swing of the move. You know, not this one, not this one, not this one. You know, you should consider the last swing of the move as a market structure, in my opinion. Then you guys do whatever you want. I mean, everybody can analyze price action as they want. But let's make it more visible, yeah, like this. You know, overall, we are still printing higher high and higher lows. So until they start to go really below these lows, you shouldn't get too bearish. It's okay to short here when you are in premium and you see that they took this liquidity. It's okay. Also, there was liquidity below this low, so totally fine. But if you want to be super bearish and hold shorts, maybe it's better that you wait a lower low. At least if you trade hourly. Then if you trade other time frame, doesn't, up to you. Okay. So what about now? Yeah. We are in resistance. We are at resistance, sorry, at resistance. And we are taking liquidity. It really looks like a triple tap. So I love triple taps, especially when they are in a valid resistance. This fair value gap is completely filled and rebalanced, so I can tell. And how about now? Yeah, good old Michael, the one that was doing the mentorship when he was sane as a mind, used to say that big wicks usually are in imbalance, and you can see a dump into the equilibrium, and if the equilibrium holds, they should print an higher high or like continue the direction. So I don't know right now. It's a bit too early to say, and I want to see how price action enveloped today, but I think that we shouldn't get bearish too soon, and overall we are printing still higher high and higher low, but we are into the valid resistance. Look, we can easily make an higher high into this wick, you know, which is beautiful because take the previous high of this candle, the second one, and then dumped. This is an engulfing, an H12 engulfing, okay? So it's a resistance, but we are still not in full resistance premium. Anyway, I'm gonna analyze what happens from here. Overall, I still think that we can easily go lower, but as I said Monday, this can easily be a pullback that they make us going higher. You know, look at this beautiful fair value gap on daily. This will be a beauty if reached. 68, confluent with all support on the left, kind of breaker, call it whatever you want, a set flip support. You know, whatever you prefer. 1 second. No. So yeah. I wouldn't get bearish too soon. That's what I mean. The whole video, I'm sorry if it was too long and sorry if my voice is bad. I wouldn't get bearish too soon. Just because everything is pointing down doesn't mean that we're gonna go down. Anyway, that's enough for me for today. I will post charts later in the Telegram group, and I speak to you tomorrow in a new video. Ciao.